Sandip Sabharwal joins us. Let's take our conversation forward. Good morning.
Morning.
In the month of May, sell and go away. And for those who went away, they are now regretting, they want to come back. So in the month of June, what should be the mantra?
Mantra should be that you should never have gone away.
For those who miss the bus, what should they do now? I mean, I'm just getting a sense there's a very strong left out feeling. I'm looking at the open interest, Sandeep. The total open interest at the beginning of the series is actually slightly lower than what the May series beginning numbers were, which means the market mood has changed, prices have changed, but participation is not there.
Yeah, because people have been taken by surprise ever since the rally started early April, because most of the commentary was very negative. People were expecting markets to crash. And in fact, if you look at the result delivery of the March quarter also, as per what I read today as a gross of all the companies which have reported, the earnings growth on a gross basis for all the companies who have reported till now is around 12.7% growth in profits, whereas the expectation was hardly 6 to 8% for this quarter. So I think the earning growth delivery also has been good. And in the current year, the profit growth outlook could be, I would think, at least 12-13%. So things are reasonably well placed. It's a buy on dips market. And as the result season winds down, I think people will have the opportunity to look at what the results have been, how the outlook is, and then take a view on where they should be investing. On a pure macroeconomic basis, I think India is pretty well placed. And total imports of these rare earth magnets would be just around 300-350 crores. But they could bring the entire, at least the EV part of the industry, and to a great extent the traditional part also, to a standstill over the next 2 months if this issue is not resolved. So I think that's the key factor we'll be watching out for. X of that, I would be positively inclined on Bajaj Auto.
If the stock falls today, you will be a buyer. I mean, let me put it this way, right, Sandeep?
Like I said, this rare earth magnet issue is an issue which we need to be cognizant of, because most of the analysts are not talking of it, but then because it's an India-China issue, so if it doesn't get resolved on time, we could see production getting stalled right at the start of the festival season. So I think that's the near-term risk. So I think the stocks will give time for people to accumulate. So you don't need to jump in and buy the entire quantity today. So if it, let's say, hypothetically, if it falls 3-4% today, a small amount of buying is possible, and then accumulate it over the next few weeks.
Management has mentioned that raw material costs are going to trend higher for them going forward as well. And, there are, of course, issues about exports as well, because they've, remember, already undertaken some price hikes in the Africa market. So the pricing pressure clearly is visible across both domestic as well as the export markets for them. Sorry, I beg your pardon, they've cut prices, they've not hiked prices, they've cut prices by 4 to 5% in the Africa region to try and regain shares. So clearly stiff competition also at play for them. But Sandeep, on the other hand, Ola, what do you say about those numbers?
The least said, the better.
Yeah, really, it's been really quite a quite a shocker when it comes to both the stock price journey. There's been no financial improvement. They're only deteriorating when it comes to their operational performance, despite the volume uptake, which, comes in, I guess, because of the steep discount. There's been losses which have, been the spot of bother for just about everyone. And they're again, Sandeep, setting ambitious targets for themselves.
I think you can make a lot of statements to excite the analysts, which include backward integration, comparing yourself to companies like Tesla, etc. But then the fact of the matter, what we need to realize is once a brand loses sort of reputation in the face of the consumers, then irrespective of what you are doing internally to do backward integration, to get into cell manufacturing, to uh, improve your profitability, getting market share and volumes back, especially when the other players are also aggressively working towards new product development and taking market share, will become very, very tough. And I think that's a reality which investors into this stock need to realize. So it's always possible that with aggressive management guidance, we could see small time bounce backs in the stock. But how will volumes, what will change the consumer perception to create a uptick in the volumes is the question mark. And I think that's something which we need to see.
Sandeep, let's discuss this curious case once again. We were chatting about this last afternoon and we continue talking about it as to how there could be more and more skeletons in the cupboard.
So I think historically we've seen in financials once new managements come in, the board of directors or the audit committee, etc., takes a fresh look or the RBI conducts a fresh review. Uh, Typically, it doesn't end at the first level of disclosures. So I think that's the risk I see in investment banks. So I think people, especially in financial, I always advise that it's not people should not be bold here. So I would remain cautious, and I think the outlook for many other larger banks is much more clearer. And if people need to be aggressive, then there are other sectors where they can be aggressive, not financials.
Sandeep, a lot of buoyancy in the real estate market for sure, but what about stocks?
Yeah, so the Worley CFA test shouldn't be used as a benchmark, I think, because the demand out there is coming because of various reasons. It includes the cost. All of us know, and I think that's become a destination sort of address. So the demand out there and the rebuilding, etc., will continue to remain strong. However, on the overall real estate sector, it's very tough to decipher what's happening because some companies are reporting strong numbers. There have been some declining pre-sales elsewhere. And in a scenario where a lot of demand indicators have been moderate within the country, many real estate demand indicators have continued to remain strong. So I'm sort of cautious on this sector at this point of time because I would think that a lot of positives are in the stock prices already. And we would like to watch out for opportunities on corrections only.
So what is that big trend, Sandeep, now for let's say 12, 18 months? I mean, I'm going to be slightly more descriptive in this question for the benefit of our viewers. For example, defense has done exceedingly well as a trend. It doesn't matter at what price you bought it, but in last 4 years, if you bought defense stocks, you've had a reasonable, appreciation. If you, for example, bought into solar 2 years ago, it's done rather well. What is that big trend now for next 2 years, 3 years, which could be called as the sunrise sector or the go-to sector?
So there are no new sectors per se coming up, but I would think that stronger players in defense, which are more credible rather than where there's noise, I think they'll still continue to do well. I would think that the overall infrastructure space and investment cycle will continue to remain strong. So I think there could be opportunities. Solar and all. So I would still think that this industry, the competitive advantages most of the players hold is very flimsy. And as the larger players come up, as Reliance comes out with huge capacities, etc., we could see pricing competition coming up here very soon. So I think people need to be somewhat cautious out here. So I think it's very tough to say whether what clear trend will be or new sectors which will emerge because any new sectors don't seem to be so visible at this point of.
Sandeep, really wondering where the triggers for the month of June are going to come in, because all the positives and even stark negatives seem like they're already behind us.
I think the monetary policy is slated for next week, and if there is a reiteration of decent easing cycle with a rate cut, I think that could be taken positively, because the impact of the monetary easing, which started a few months back, is going to be start felt. So it will be felt from now on, because it typically takes 6 months. So I think over the next few months, the impact of easing will definitely help economic growth. The second trigger could be if the monsoons progress is normal. Uh, then there's the Indo-US trade talks, how they proceed. So I think there are a lot of factors which could still generate interest and swing the markets.
All right, so that's about the seasonality impact. Let's watch out for that. But Kunal, what about
Okay, Shishi's not mic'd up yet. We're just gonna, pick up on that. But Sandeep, another trend that we were talking about just yesterday, right? These massive promoter stake sale, the absurd valuations that IPOs are getting subscribed right now. What's that telling you about the market?
That on one side shows that many of the promoters might be feeling that this is a good time to cash out while giving positive commentary on the company's operations. So that doesn't gel with their commentary. Secondly, it also indicates a left out feeling among many investors, because they are willing to put in money at very high valuations, especially in the small and mid cap promoter sales. So I think the large cap promoter sales, like Interglobe or ITC and all, were fine. I don't think we can read too much into them. But the mid cap ones, where some of these companies are getting sold at 60, 70, or 80 P also, I think that's where one could see concern. And from the buyer's perspective, I think it's more desperation, because mutual funds are sitting on 2.5 lakh crores of cash in the equity product funds. I think PMS, AIS also sitting on a lot of dry powder, and a lot of these investors are getting desperate to participate now. So I think that's the scenario. But I think these kind of aggressive valuations, which ultimately could lead to losses, will not are not positive for the markets per se.
But Sandeep, the point to note is that for the entire hospitality and tourism industry, there was that anomaly in Mahakumbh, and which is why the numbers are looking that elevated. Going forward, where is it that you think that there is still value to buy into any of these names and catch on this theme?
The current quarter might see some softness because of the border issue which happened, because of which some travel could have got postponed, etc. So I think some of these companies' results might not come out as good as what was expected. But I think many of these companies, be it Interglobe on the aviation side, or Lemon Tree, Indian Hotels on the hotel side, etc., I believe the longer term fundamentals still remain pretty strong. And I think they remain good stocks to pick up on dips.
Any preferred list, Sandeep, that you would have?
That's the list.
Okay. Good to speak with you as always, Sandeep. We'll let you go on that note. So that's really the take coming in on some of these names.
If you like this video, then like, share and subscribe to ET Now.